All right, traders, welcome to today's market recap. Very, very dull day today, and it's been that way in the markets. I'm joking, of course. Big action in the markets to the downside. Risk disclaimer in front of you. Everything that I am going through today is for information purposes only, not giving out any advice or recommendations. So let me get into today's market recap. Again, Christian from Hertz Tribeca Trade Group, if I didn't say that in the beginning of the video. So yes, kind of it helps sometimes to joke around a little bit, but when you have a day like this, it's a mess, it's a washout, and I will discuss that. I was just listening to Michael Santoli, which I think he does an excellent job for CNBC, but bonds and stocks both clobbered, and something that he said is something that I've been saying all day, and just as a matter of fact, just recently, is that you have to look at what's going on in this bond market, right? I hear a lot of people talking about they're looking at the chart of high yield bonds, HYG, right? But you look at any chart in fixed income, it is heavy to the downside, right? And that is because of the interest rate move, right? I've been talking about this quite a bit about credit spreads, which I think did move up a bit, but I don't want to spend too much time on credit spreads because it gets pretty in the weeds. But I'll come away with, why is this? There we go. Right. So when we look at credit spreads, and we're going to look at treasuries over high yield credit. So you can see they did jump today, right? So again, the reason why we're comparing one versus the other is because if you're just looking at one, right, you're not looking, they all have interest rate risk, right? And interest rates are climbing very fast, right? And then of course, what we like to do when we compare one fixed income product versus another, one completely different area of fixed income versus the other, we duration match it, right? So that we're looking at similar maturities, right? You can't look at something that has a 10-year maturity with something that has a 30-year maturity, right? And if it's different products, right, it's completely different thing. So yes, this is the first time that this is the biggest move in spreads this year, right? That does get us to the high, but yeah, so I mean, you could look at preferred stocks, you could look at investment grade stocks, you could look at high yield. They're all pushing down, right? So I always, and again, this is just what I've learned over the years, you always start with treasuries. Why do I always look at ZB, the 30-year treasury? Because it's usually the most sensitive. But of course, you're seeing this in any one of these treasury ETFs or futures. But there's the move, and so let me just make sure I've got the 20 year, right? Because there was another level that was taken out. So I really think for us to do any type of major movement in equities, this has to stabilize, right? This was a big move, what we've seen the last few days, and we know that you could look at what we've experienced this year. Anytime where rates have really risen. And again, all you have to do is invert the chart to think about it in terms of rates, right? Prices go down, rates go up. It's just how a bond works. So the further and the faster this goes down, the more that you're going to have that it's going to affect the equities. And I don't remember a time. I have to go looking. I'm not one of these. So many people on Twitter, they do a great job at data mining, and I'm sure you'll see someone come up with this, because I'm not the only one who's thinking about this, but I don't know very many times where we've seen a sell-off this hard in bonds and in equities. It is very unusual, right? And you could look back, right? Obviously, if you want to look at what happened, and again, this is just one particular major correction that we had, but if you look at what happened in 2020, which I keep coming back to, this is what bonds were doing, right? It was a flight to safety, right? They were going up, right, as people were getting very worried about the market. This is highly unusual. In fact, I don't know of a time where I've seen this before. So again, it's rare. I've been trading for a long time. I traded through the credit crisis, and you could look at that time too. And during that time, right, if I can bring that up, I should be able to bring that up because we're at, right, here's what bonds did then, right? Bonds went up. going into the to the end of 2000, I guess this is 2008, and then they started to kind of bring in. So again, it's one of those things, like, there's always situations where, and this was something that I was trying to go over in the room earlier, is that every time that there's one of these major, bear markets, corrections, however you want to classify it doesn't matter, right? There are similarities between, um, just various different market characteristics, but it's always different, right? So for example, what we experienced in 2020 with the pandemic and shutdowns, that was different than 2008, which was a credit crisis, right? And there's all different types of corrections in between there, all for not the same reason. So what we're going through, and that's why, like I've said this before, and again, you could look at this to understand this, that what we're going through, and it's funny because I put this chart out to a couple of people this weekend and they got mad at me because I'm like, this is not what's going on now, is not nearly even close to what we experienced in 2008, 2009. But what we're experiencing right now is different, right? The Fed is trying to dampen these inflation fears, and not just fears, but actual inflation, and they're getting the economy to slow down, right? And it's going to teeter probably on recession because of this inflation issue, right? That's not something that we've experienced in any of this time before. It's not something that we experienced back here. Well, I won't even go back this far because these products weren't there, but it wasn't there in the tech bubble either, in the in 1999, 2000. So to say that you've seen this before, right? We've seen bear markets and so forth, but this is different than what we've experienced before. And I think just, understanding or acknowledging that no one has a crystal ball, and I tend to look for characteristics, right? Because as we're seeing price go down, right, so let's turn over. So this again is bonds, right? Which again is very unusual to see. If I didn't say that enough in this video, let me just take off. Let me just adjust this chart for you guys so that the labels don't take up so much room. But so where are we headed to here, right? Well, when we look at this chart, right, we know that we had a couple of these bear market rallies. This was a bear market rally. We talked a lot about the breaking of this range. One of the things that I said, and I kind of sent out some things that I would be watching for members, right? I talked about, I send out macro and market thoughts, and then I put together a video which was close to 50 minutes long this weekend. But I said, will the retest of the lows find buyers? Well, we smashed right through the where we had the previous support, previous lows. I mean, no question, right? We went through those. So we're not finding buyers yet in this market. It's also a very complicated week, right? We've got quadruple witching on Friday, which they're already, institutions are already positioning for that quadruple witching because we have an index rebalance. We have a big index rebalance on Friday. That's the S&P and the Nasdaq. So that was released on Friday. The S&P changes. Remember, it's not just the one in and one out type of rebalance. The whole index rebalances, and that happens in every index. So for example, the equally weighted indices, the XRT, the XHB, the XBI, those all get reweighted as well. Everything gets reweighted back to their benchmark. So I discussed that in the weekend video. If you're not a member, you can access that video where I talk about index rebalancing and how that affects things. And I went over that on Sunday, yesterday. So we have that going on. And then of course we have a Fed meeting. So we have all these kind of events coming together. And I think that's kind of adding to the uncertainty. It's adding to the pressure right now in this market. So what did I have highlighted number 2? And then we'll go back and I'll give you some things. What else, right? New lows. Well, I'll have to look at that I didn't get a chance to look at new lows, but I'm also watching, I think, the equity put call ratio once that comes out today, right? We know that got to the highest equity put call ratio that we've seen this year, right? So we're starting to see more and more of these things start to kind of pick up and get extreme. Where are we in the process of that? In terms of, is everything extreme yet? I'm going to show you one thing in a second, which I think is pretty extreme. But ultimately, for me, it's price and trend are the ultimate indicators. Some people just like to use price, right? Pure trend traders just like to use price, right? So we know that we're moving down pretty decently. Unfortunately, I don't have any major support nearby, which is and again, which is also why I'm looking for things that are getting very extreme. I don't have another one of these virgin point of controls for some point down. On the weekly chart, we are at this S1, right, which is an extension away from the value area for this year, right? And then we've got the 200-day moving average, right? And then there is a virgin point of control. So these are some things that we could get down to. I don't know if it's going to be in a straight line, right? We know that we kind of, on this last bear market rally, we got into the value area for about a week. 2 weeks, we kind of hung in there, and then we fell apart and fell back below last week. So the trend right now is down. So trying to kind of really guess where we're going to where this is going to bottom out is just that, is a guess. And I think the better that you can understand that this needs to play out rather than trying to make a prediction, right? Anybody can make a prediction. Whether or not it's going to be true is a whole nother thing, right? I understand a lot of FinTwit traders, they'd love it when people make predictions. It doesn't even matter if they're right or wrong. They just want something to cling on to, right? You just kind of have to let it play out, right? I would like to, I would like to have that silver bullet indicator. I mentioned this with somebody because I was talking about, which is the next topic I'll get to, which is market breadth, right? And I mentioned like, hey, this is pretty unusual today to see market breadth this ugly. And so somebody was like, oh, does that mean that we bottom? No, in any of these indicators, my opinion is that you could use it in your overall analysis and view and say, and to kind of help you think that, hey, maybe we're getting closer to the end of, of a sell-off or even a move up, right? But you need to see it in the price and the trend, right? Really reverse. And, a couple things that I have talked about previously, as I'll repeat myself, because there really wasn't much, there really isn't any major single stocks to talk about. When you have volatility like this, and we'll look at the VIX in just a second, stocks tend to trend together. Now, of course, we didn't see that in sectors today. There's separation between sectors, but a lot of names, they just kind of move together. But again, I use this example a lot. Because I think it helps, right? So when we look at what happened in 2020, and if you're a regular viewer of my videos, I've talked about this example, but as we were going through this, right? And here was the tricky part in here, but it was pretty straightforward in terms of this, because price stayed below the 5-period exponential moving average almost the whole time down from when we started to break down in February, right? Except for this little movement here where price got a, and again, things aren't supposed to go down in a straight line. They're supposed to kind of consolidate and move down, consolidate, move down. But once this broke, you could see that price never got above the 5-period moving average, right? Until the bottom was in. Now, again, like I said, this was a pretty straightforward, simple case, right? And then once we made that, we did have a V recovery, which is, the whole time, by the way, of this V recovery, everybody was thinking that we were going to get a retest. Not everybody, because I wasn't one of them, but I said, hey, I'll let price kind of confirm that. But, it just goes to show you, even when you had a V recovery like this, people were still thinking that there wasn't going to be one, right? And of course, the Fed had the markets back then. The Fed doesn't now. So where are we now? Right. Well, we've done this. This again has been a more complicated situation because price has gotten above the 5-period moving average a few times now, right? And it's been rough because you've had chances to play things to the long side, but you just haven't been able to. Stay above the 5-period moving average for very long. But again, it's probably going to take some time before we get back above this line, and it's something to watch, right? So the way, as fast as we're moving to the downside, we will probably see some relief bounce this week, but you kind of have to remember that if we do get a relief bounce, and I actually put on one small trade for tomorrow, and I will probably put on another trade tomorrow too, to play a short-term bounce, because moving down as fast as we have, there's going to be some backing and filling. It's just how it usually works. If it doesn't, then I'll lose the premium in that trade. And I could tell you, in my trading account, I'm just about 100% cash at this point, right? I was about 90% cash coming into today, and I just started unwinding. I unwound 2 or 3 trades right on the open, which I'll show you because I always show the trade blotter in here. I try to be as transparent as possible with what I'm doing. So that's that, right? And again, like some levels to watch. Again, these extension are more speed bumps than support, but 3553 and this 200 period moving average. Notice that we broke through this last time, and it could be down here where we're ultimately getting to. It's anybody's guess. All right, Nasdaq looks like this on the weekly. Right, 200 period moving average is a little bit sooner. We did also slice through that recent low. And small caps, interesting, kind of just got back to the lows, even though that they were down big today, down 4.6%. They still kind of hung on to those lows from May. Interesting. All right. Note the big volume today in some of these things. All right, and Russell futures, that's pretty big volume. So the question is always at this point, like we see all over the place, like, is this capitulation? Well, one of the things that you can look at, and I'll bring back the S&P up. And again, I just want to make sure like I'm representing this appropriately. So what this indicator does, it's called the web breadth indicator. We've been using it now for a few years. It really it looks at down volume over up volume, right? And it will basically just kind of tell you like, how one-sided is the volume, right? And when you look at this over time, right? So I made reference to this back when we were kind of putting in this low, and it actually did pretty good. This was the worst breadth of this this year. So you could see we did rebound from that. So the question is, we got much bigger down breadth today than we did, even back a month ago. And how does this set up versus other times that we've seen this before? So again, I'll kind of use this mouse, which I know is a little bit tough to say, but here was another time where the breadth was very bad, and it was like a -40 nicey. So it did not mark the low. So I'm going to zoom in here for a minute so that you can see this. But here was here, right? And we actually did go lower here, right? Once this negative breadth, the worse that it got, then we started to see each and every time after that, there was also heavy down volume as well. But it actually it declined along the way. So that was maybe a hint. But again, it wasn't that one day, right, that caused it. We did snap back the very next day, right? And that's kind of what I'm looking for in my trade that I put on. But we did continue lower. This one was kind of an unusual one. And I don't remember what the reason was for this. This was June of 2000. Oh, am I in the wrong period? This is June 2011. Let me just make sure I'm in the right. Let me start over here. See, I make mistakes. Oops, let's keep 20 years. There we go. Yeah, this skips, that's why. All right, so this is right. So this was yeah, so it was the date, June 11th of 2020, right? So this was also, it was kind of one off of a day, really negative volume, right? And we did snap back after that. So again, just going over some other occurrences where we've seen this really negative Breath. Here was another one. This was, I think, 2016, right? So this one was on this day, which was a nasty day, right? And we did come back a little bit from there, and then we did retest those lows. Another like bad volume, big down volume day, and then we did recover from then, and you can kind of see that. So again, what the takeaway from this is, I think it's just part of the process, of if we were moving down, right? Because what we've heard about the last couple months is that it's been too complacent, right? The selling has just been, everybody still is buying the dip and so forth. I think this looks different to me. Okay. So again, I'm not predicting that tomorrow we go up. I'm not predicting next week we go up. I just think it's one of those things that I think should be an important data point, right? And we'll see where we go from there. All right. So again, I like to see when we're having these types of moves, was it, to kind of basically tell, was it extreme? Are we at least somewhere like getting through the process of, seeing this previously? I think we're on the way, but I wouldn't be surprised if we do come down here. Right. And I've been saying that for a while now. All right. So that's it. I wish I had some other things. I think just being patient, going back to some things that I was talking about, right? I mean, I would, and I think lots of people want to see an end to this sooner than later, but we've got lots of problems on our hands, right? We've got this inflation problem. I do think, and one of the things that I said in the video, and I'll probably leave it here, there may be some trades to go through, that we can, where there will be some opportunities in the next month or so. But I think this whole summer, right, I think it's going to be, even if they raise interest rates 75 basis points, which is what they which is what they kind of floated through the Wall Street Journal today. I think that they do raise interest rates by 75 basis points, but then it's going to be a wait and see. They're going to want, probably what Powell is going to say is, I need to see inflation. I need to see the data have an effect and inflation start to come in. So that's going to be, that's a painful process. And I think we'll find out more information through watching the price, right? And that's the best that you can do. So, that's my job on a day-to-day basis, is to not only try to find some winning trades here and there, but it's also to kind of continue to monitor and, realize that, you just kind of have to be patient until you see better things. And that's also, right now, preserving capital and mindset is a big thing right now. So you could see, here's what I did in the first 15 minutes, right? I took off 2 swing trades that I had left on. This one was a trade I put on about a week ago. My stop was 220 on that. It opened below this. It opened right around the stop. I gave it a little bit of time, and then I went from there. Geo, which actually is a name that I do want to watch, because unless I wasn't watching it at the end of the day, but it looks like an inside day, right? So that's a name I'll come back to, but I just really don't want to be bogged down with too many positions. I day traded Tesla a couple times today, which worked out. Again, I did not stay long in these trades because I think Tesla closed on the lows, but you had a nice little move here, and so I traded it once. I kind of bailed on it, and then I got back involved in here, right? And then I bailed on it in here. So this worked out twice today for me. Again, I wasn't looking for a double. I wasn't looking for a triple or a home run. And I lost money on a couple other, trades. I lost money on Apple, went down to my stop for $2. So that one did not work. I was in Valero very quickly. Interesting what's with, we did see at some point that energy stocks were were down pretty decently, right? They are the market generals, right? It's not the FANG stocks, right? I heard this like about a month ago. They're like, oh, they're finally taking out the market generals. And people were talking about Apple and Microsoft. I'm like, they're not the market generals. They haven't been for a while. The market generals are the energy stocks. So usually, why is that important? Right? Because usually when the market generals fall, then you're also kind of closer to the end of a correction. So I don't know if this is enough of a fall. Down 6% XOP today. It did come off those lows, a little bit. I think it's important to watch crude. My thought on crude is, it really depends on what your view is, right? If people think that we're going into a recession, right, then I don't know how you can be in oil, right? Because there's two components to all of these things. There's the supply issue, which we know that there's a supply issue with crude and with nat gas, but there's the demand issue, right? If you were thinking that there's going to be a major recession, then how the hell are you in energy stocks? Because the demand will have to fall off, right? If there's going to be a big recession. So again, make sure that you're matching, what your viewpoint is with what you're holding, right? I see these people on Twitter. They're like, oh, FANG stocks are going to continue to go down, but oil is going to continue to go up, and oil is going to go up to 150. Explain that to me. How is that going to happen if the demand backs off? if things really start to continue to get worse and worse? I don't have I wish someone would explain that to me. Maybe they think that you're just not going to be able to get nat gas or oil anywhere. But I just have a hard time believing that we're going to get up to 150 or 200 in oil if they continue to raise interest rates and we get into a stagflation situation, right? Or we get into a negative growth situation. Please someone explain that to me, how the demand is going to go up more. Again, I'm not talking about the supply issue, but I'm talking about the demand issue. How does the demand go higher and higher if we get into a recession? I'll continue to pedal on my bike, which has no miles per gallon, because it's a bike, is how I get to and fro work. So I'll leave it there, but I think it'll be very interesting to watch. And the other part of it too is, hey, if crude continues to move higher, maybe growth isn't as bad as what everybody's expecting. However, when you look at other commodities, right, copper's been going down, aluminum's been going down. There's other things like this, right? Palladium has been moving down, right? Palladium took out a VPOC down 6%. All right. So there's issues with a lot of these things, right? It's not just a supply issue for nat gas, right? Another one is wheat, right? Which continues to get a lot of attention, right? This is still below the 50-day moving average. And again, these are all good things to monitor, but wheat is below the 50-day moving average, right? It's not breaking higher. All right, guys, I'll leave it there. A very, very interesting day. I think it's going to continue to be a very interesting week as we go along, with a lot of events this week. Wednesday, FOMC. We're also going to get some more economics out tomorrow. We're going to get the PPI report at 8:30, right, which is another gauge of inflation. And then we're also going to get retail sales, which again, I think is tomorrow. We might as well bring this up. Retail sales is on Wednesday, excuse me. Tomorrow's PPI and small business optimism, which I would expect a very low number for this. All right, guys, that's it. Have a great night. See you tomorrow.